Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpowered.com, and welcome to another one of my weekend review videos. If you remember in last week's video, we talked about 4 different types of trades. We had good trades, bad trades, winning trades, and losing trades. And in today's video, I want to show you an example of a good trade that we took in our live trading room. All right, pound dollar. Yesterday we looked at a double bottom on the pound dollar. If you guys remember, Jason Greystone and myself, we were both salivating over this opportunity. We said, ooh, it looks so good. We want to take it. It feels good. It smells good. It tastes good. Unfortunately, it wasn't something that we were able to take. Now, we did see some bullish reaction off of that move. You'll see that when we go down to the 240 chart. All right, if you guys remember, it doesn't look like it too much right now, but this was our double bottom initially. Down here, we consolidated for a day and then we broke out to the upside. So the move is over, right? It came to where I thought targets would come to. We should just forget about it, right? Kick the cat, crunch up the piece of paper, throw it away. No. You guys are watching too many syndicate videos, right? Just like the dollar yen yesterday, right? What did we say in yesterday's dollar yen syndicate video? All right, I got stopped out. I got skunked out. It stinks. Ooh, it hurts. Bang. Right? We're done. Short memory. What's the next opportunity? As a trader, we're only as good as what? We're only as good as our next trade. Right? We're only as good as our next trade. So now we look for another opportunity. We see this right here. We see the market coming down and consolidating. Right, let's go down to a 60-minute chart. Give us a closer or a better view of this. Market's coming down and consolidating. We have a breakout to the high side, right? Higher high, higher close. What is our next option? Identify, predict, decide, execute. What is our next option? Brev says sell. Anybody else? BMO says bullish. Wait for retest and go long, buy pullback. Yeah, I'm thinking that, guys. I'm thinking you buy the pullback, right? We have a breakout. Wait for a retest of structure. We're at structure right now. We're at our previous structure highs, right? Here's our previous outside return right here. You can look for a buying opportunity in here. Right? So we're always looking at the next opportunity. We're always trying to stay, we call it staying one step ahead of the market. We're technically not one step ahead of the market because we have no idea what the market's going to do. But we're trying to set up possibilities for what can happen next and at least put ourselves in a comfortable position. So what we have here is we have a complex pullback right now. Right? So we have the market making new structure highs. We have a little ABCD pattern here. Retracing back into previous structure. We call that a complex pullback. Now we can also add in a Fibonacci retracement. I'm calling 382. Remy says bull cipher on the 4-hour. Let's go back and check that real quick. Potential Remy or at mark? Oh, okay, yeah. Talking about the down here, right? Gotcha, cool. All right, so you have your complex pullback right here, coming back into previous structure. I think we'll get a 3D2 if we take our Fibonacci retracement from this swing high to this, or this swing low, I should say, to this swing high. Boom, a little bit past the 382. And we can ask ourselves, here's our kill zone for getting long. What do we need to happen in this kill zone? Looks like we're getting a positive reaction. 5 months average ADP employment gain is 175K, which is the lowest since 2013. Give me 1 second. This may be a perfect example of what we were talking about. Hold on real quick. But here's your kill zone for looking for a potential trend continuation trade on this situation. So now you need to ask yourself, what do you need to occur within this kill zone in order to take the trade? Can I just be aggressive? Can I just say, hey Akil, if it comes down to the the 618 Fibonacci retracement that lines up with an even handle number? Can I just take it right away? Akil, do I need a double bottom? Akil, do I need a doji candle, a higher high, higher close? Do I need the RSI to show me anything? Right? That type of stuff is all dictated by the trader. It's going to be different, right? Richard may need a double bottom. Ron may need a double bottom with RSI diversions. Frank just may need a touch of the 382 or a touch of the 31 even handle, right? It's going to be different by the trader, all depending on how conservative or how aggressive they are. What we can do is look for areas of confluence. Again, we have our harmonic move right here. Ooh, he said it again, that word. We have our harmonic move right here. Let's take a Fibonacci extension, see what happens. Swing high to swing low. Okay. You see we're going to have a 1618 Fibonacci extension down here as well. Let's take a Fibonacci retracement from our most recent swing low to swing high, just to see if we get any confluence. All right, so not too much confluence in here. We do have two Fibonacci's. You can see a 131 even handle. We have a 618 and a 786 lining up right at that level. And this kind of also comes at our little, you see this little consolidation within our kill zone? Give me a yes if you guys see this. I'll right in here. All right. That's probably, just based on my experience, it looks like that's going to be the best level to look for a potential long opportunity. Again, not only do we have the 131 even handle, we have a 618 and 786 Fibonacci retracement lining up at that even handle, and that's at the top of this little consolidation, right? So, and if the market were to get down here, I bet we would see, there's a better chance of us seeing that RSI go oversold. So I think that's a good level to start looking for that trade entry. All right, so that's what we're going to be clocking here on pound yen, or not pound yen, pound dollar 5 minute. So you may get a hidden story right here on the range bar chart. Now I'll tell you what, if we get a higher high, higher close right here, I'm buying this up. We have, well, war room starting soon. So we got 5 minutes. If we get a higher high, higher close here, after this candlestick formation, I like this. I did a video on it. I like this. I'm going to buy it up if we get a higher high, higher close. Now we have to head over to war room. So I will see you guys in 10 minutes or when Charles is done. But we can continue this conversation when we get back if you guys want. Our 10 minutes are up, so we're back. I did mention I was going to take this trade on pound dollar if we had the higher high, higher close. As you can see, we did not get the higher high, higher close. Price action has made its way down into our kill zone, into our smaller kill zone, the zone that we were watching. The RSI has dipped oversold. So now we're getting ready to look for a potential entry in this level. That's going to give us an even better risk reward. All right, we were watching this morning. We're looking for a double bottom in this area. We did get the double bottom. Now, I have my stops placed below the structure low, so a little bit conservative with my stop loss here. I want to give this thing room to breathe. So my stops are down here at where are they at? They're down here at 130. I can just do it here. 130.57. Sorry, yeah, I forgot I have everything loaded up. 130.57s right down here just to give myself a little bit of breathing room below these lows. A 2 ATR stop would have put me at 30.66, right? Which is right at structure. I don't want to be right at structure. So we have the risk reward to make it work. All right, so we're looking at a risk of about this much. Boom. Targets looking for a move back into previous structure highs, right? Well, not the exact previous structure highs. Looking for a move back up into these previous structure highs right up here, right around 130.43. So not shooting for these ultimate highs, shooting for this level 130.43. Again, we have this little flip right here where support turned to resistance. Don't really want to fight that off, so we'll look for targets right around here. Secondary targets, this is where you go out to your higher time frame. Sometimes you have to be very, very patient with these ideas. Sometimes you have to be very, very patient. The market doesn't always give you what you want right away. It makes you work for it. So hopefully we're rewarded for our patience with a winning trade. But at the end of the day, it was a good trade, assuming we don't sabotage ourselves while it's in process. But we've started off as a good trade, so at least for your initial grade, you can give yourself an A+, or give yourself a point for the right execution. Those don't move at all. Did we get a... All right, let's go ahead and move this up to here. Lock in some profit. Yeah, swing trades stay on though. Stay on through the day, stay on over the weekend. All right, as you can see, our price action eventually did go to my first profit level, which was up here around the 131.44 level. Unfortunately, I was stopped out on trail stops as the market retraced. If you remember, we entered a trade right here at our double bottom. Price action immediately went against us and then continued or proceeded to go up, put in an outside return, and create a new structure high. Now, after creating this new structure high, coming about, we were about 10 pips away from profits, what I did was manage the position. So I took my stop loss, which was all the way down here below this level, and I rolled it up above the break even point after new structure was created. Unfortunately, price action did shoot back down to test the 131 even handle. We spiked past that a little bit, taking me out in the process before rallying up to target ones. Now, it's typical for a novice trader in this situation to get very upset with themselves, scream and yell at themselves saying, oh, I should have stayed in the trade. Why did I move stops up? Why did I reduce my risk? If I just would have kept my stop loss below structure, I would have made, what was it, 44 pips, 45 pips out of this trade. Now, it's very easy to think that way in hindsight. But what's most important, again, just like we discussed last week, was it a good trade? Did you manage the trade you were the way you were supposed to? And if your rules say that you're supposed to involve yourself in active trade management, meaning rolling your stop loss with structure or with a fib dots or parabolic SAR, essentially rolling your stop loss with price action, did you do that? So if you're supposed to do that, then you executed your trade correctly. If you were not supposed to do that, then you should have left stops where they were. And again, it's very easy in a situation like this to say coulda, woulda, shoulda, and I would have made some pips. But ask yourself this question. What happens if price action would have done this? Zoop, and sunk all the way down? Would you still be saying to yourself that I shouldn't have rolled stops if you knew you were supposed to? Right? So we can't base our judgment off a trade in hindsight. We can evaluate it, we can take notes, we can try to improve for the future. But one thing you want to do is you don't want to beat yourself up just because a trade didn't go your way. Now, although I did not see the full profit potential that I wanted to, I got stopped out for plus 6 pips, which, essentially you can call it break even. Break even is essentially a winning trade. I did not lose money. And remember, my number one rule of trading is don't go broke. So do not lose money. So every chance I have to conserve capital, right, that's a plus. That's a positive in my book. However, more importantly, I followed my rules for this trade, both on execution and both on exit, making it a good trade. So although it wasn't a winning trade, well, technically it was a winning trade, but let's just call it a break-even trade. Although it wasn't a winning trade the way I wanted it to be, it was a good trade because I followed my rules 100%. And at the end of the day, being consistent with following your rules, that's what's going to allow you to be consistently profitable in the market. So a really good example right here of actively watching how we go through the process of trading from the initial analysis to the initial idea for entry, to redoing our idea for entry, to seeing if the market's going against us, to finally getting involved, to managing the trade. This is basically every bit of a trade that you will see over and over again. And hopefully this is a learning experience for you guys. So thank you for joining me. If you liked this video, guys, do me a favor. Don't forget to hit that like button. Again, it takes 1 second. And it is really a big help for us and our channel. And if you guys are new, if you like this type of video, and if you'd like to see the different styles that we trade here at tradeempowered.com, subscribe to this YouTube channel and make sure you head over to our website, click the Learn to Trade tab and make sure you sign up on our email list. That way you don't miss any of the free webinars, any of the free training that we produce. Until next time, gang, plan your trade, trade your plan. Thank you so much for joining me, and I will see you next week with another Forex trading video. Now, how many of you guys use the RSI? And we're going to get to the Elliott wave question in a little bit. How many of you guys use the RSI in your analysis? All right. Here's something that I do. I've talked about it in the past, but I'm not sure if it was here in the room. I like to set my RSI right here where it says calculate on bar close. I like to set that to false. Now, the default is going to be true. And take a look at my RSI down here, right? So when I hit apply, look what happens to my RSI. Right? So it's stagnant. It's right here. Because again, the RSI is based off the close of the previous bar, right? Now, if I change this to false, now I want you to take a look, if I can do it. Here we go. Now I want you to take a look at my RSI. Give me a second. You see how it changes a little bit, guys? Give me a yes if you saw that. You see how it's wiggling? Yeah. What that does is it wiggles and it adjusts based on what the RSI would be printed at if the current bar closed as is. The RSI wiggle. Yeah, there we go. So I like having it on false because I like to be able to see if our candle closes, especially if we have like a big bearish candle. If our candle closes at this particular position, then how would that affect the RSI? Now, again, we always want to wait for the close, but it kind of gives me a heads up, especially when the RSI is hanging around that 20 mark where it's like, we may go oversold, but we may not. So that's something you may want to do if you guys are interested in the RSI wiggle. Just change it to false instead of true. I mean, it doesn't really do much, but it's a little help. Now, to answer your question, wiggle it. Yeah, wiggle it. To answer your question about Elliott wave theory.